Colin McGranahan of Sanford C. Bernstein says Bed Bath & Beyond is winning the coupon war by discounting less and buoying its profit margins. Colin is a Bloomberg Best on retail. He's with us on the phone this morning. Colin, we're going to talk about Bed Bath & Beyond in 1 second. I want to talk a bit about the broader retail universe. It looks like it's turning out to be a better holiday season than many expected. We just got the numbers in from last weekend's shopping, and they were up 5.5%. What is that telling you about the retail universe?
Well, I think we're in a much better environment this holiday than we've been in a couple of years. Certainly, I think the retailers made a bit of a calculated bet that the consumer was going to show up. So the retailers built inventory. They came to market with fairly aggressive promotions to get consumers out there, and I think that bet's paying off. We're getting some pretty good numbers throughout the season here. Bed
Bath & Beyond seems pretty optimistic about this quarter, which ends in February. Who do you think? You cover many of the bigger names in retailing: Home Depot, Best Buy, Dollar General, Costco. Who do you think are going to be the major beneficiaries of this uptick in holiday spending?
Yeah, the specialty chains are certainly doing better. Clearly, we're still in an environment where there's a real dichotomy of upper-income consumers versus lower income. So you're seeing much better sales trends at the medium and upper mid-level, and the specialty chains are enjoying that. I think Walmart's still struggling here. We won't get their numbers till well into the new year, but I don't think they're enjoying the same level of sales that some of these other retailers are.
Talk to us a bit about Bed Bath & Beyond. We saw the stock pop after hours once those numbers came out and everybody got word of the guidance. What do you think is more important here? The outlook going forward, or perhaps some cash being returned to shareholders? They're doing a stock buyback, some $2 billion, the first time since 2007.
Yeah, I think what really drove the stock and the concern here going into the quarter was this was the first quarter that Bed Bath & Beyond was anniversarying or lapping against much tougher compares. And this is somewhat true of retail overall, but certainly true for Bed Bath. They came into the quarter up against a positive 7 from the third quarter last year, so a pretty tough compare, and the comp came through very strongly. They did another positive 7, and I think that really is reassuring to investors that the top-line momentum is continuing.
So it has to do with the fact that people thought it was going to be very difficult, given the fact that we'd already emerged from the recession, for companies like Bed Bath & Beyond to continue posting solid year-over-year gains. But you have renewed confidence now that that's possible heading into 2011.
Absolutely. We saw it in Bed Bath, and I think we're seeing it in the rest of retail. Consumer spending is actually improving. It's not just easy compares anymore.
Now, there's some people, they may not be Bed Bath & Beyond shareholders, who aren't going to be happy to see Bed Bath & Beyond returning $2 billion to investors in the form of a buyback, because that's cash that isn't being spent on jobs, on expansion, et cetera, et cetera. Is Bed Bath & Beyond being a little too conservative, perhaps, with its expansion plans, more or less limiting them to what we saw this year?
No, I don't think so. Of the retailers in the U.S., this is actually one of the better organic growth stories. This is a company that will grow square footage at about a 5% rate. So this is a company both reinvesting, creating jobs, building new stores, and because of the profit margins and cash for the business, able to still return a healthy amount of cash back to shareholders. Now,
one of the dominant themes in the Bed Bath & Beyond story, as you've pointed out in your research, is the disappearance of linens and things. When you don't have a major competitor, it's a whole lot easier to do well. At what point do you think Bed Bath & Beyond is going to start feeling more competition, and who is it going to be from?
Right. Well, I think that was the concern coming into this quarter, that they had now fully anniversaried the linens exit. The easy compares were gone. And I think one of the highlights of this performance is that even without linens and things, they're still taking market share, and they're still enjoying strong top-line strength. So I think that as the only real dominant big-box specialty retailer in home furnishings, they're in a now somewhat unique position.
Really? So they're not going to see renewed or more intense competition, perhaps, from some of the more general retailers like a Walmart or a Target, for example?
Well, I think those are great competitors, but the home furnishings sector is very fragmented, and they have a leading position.
Colin, great to have you here in the Inside Track to talk about holiday shopping and the results from Bed Bath & Beyond. Colin McGranahan of Bloomberg Best on retail at Sanford C. Bernstein.